Welcome to another episode of Sustainability Talks, where we explore the intersection of sustainability, business, and impact investing. I'm your host, Rob Genieser, Managing Partner at ETF Partners, or the Environmental Technologies Fund. Today, we are joined by Rakhi Kumar, Senior Vice President at Liberty Mutual, where she leads efforts to integrate sustainability across the global enterprise. Rakhi chairs Liberty's Climate Council and represents Liberty on various sustainability-focused groups, such as the TNFD Forum and the IIF Sustainable Finance Policy Expert Group. With an impressive background spanning ESG investing, consulting, and finance at organizations like State Street Global Advisors, IIF, EY, Moody's, and Booz Allen, Rakhi is a globally recognized sustainability leader. She holds an MBA from Yale, a Bachelor of Commerce from Bombay University, and certifications from MIT and the Institute of Chartered Accountants of India. In this episode, we dive deep into Rakhi's extensive experience and unique perspective on integrating sustainability in the broader business strategy. We explore the specific challenges and opportunities faced by the insurance industry in addressing climate change, such as managing risk, supporting clients' their sustainability efforts, and leveraging their influence to drive sustainable practices. Throughout the conversation, Rakhi draws upon her background in finance, consulting, and ESG investing to provide practical advice for companies looking to embed sustainability into their core operations. We also touch on the evolving regulatory landscape and emerging trends shaping the future of sustainable business practices in the insurance sector and beyond. So welcome, Rakhi.
Thank you so much, Rob. Thank you so much for having me as a guest on your podcast.
Excellent. Thank you. And so let's start at the beginning. Can you share with us a little bit more about your journey and what inspired you to focus on sustainability in your career?
Yes, Rob, I'm going to age myself a little bit. So it was really around the Enron and WorldCom scandal that it's that that inspired me to focus on sustainability at that time, the G of ESG. I was a young second-year business school student taking a course on international finance, and the crux of that case study that I was doing was around watch out as a global investor, watch out for governance issues in your investments. And so that was the aha moment for me as to what I wanted to focus my career on, because in the real world, outside the classroom, you had the WorldCom Enron G blowing up or governance blowing up. And I very naively, Rob, thought that every investor is going to want a person like me, somebody who understood accounts and business and governance. So that's going to be my career focus. I was so wrong on that, Rob. And governance at that time was a compliance function with people who are with legal backgrounds. They didn't even know what to do with a person like me. So I had to be very creative when it came to finding jobs and creating my own career paths and learning and moving into like this whole sustainability or true ESG world. So yeah, that's what got me into sustainability.
Well, so I have to ask one specific question there, because you mentioned the G. How did you get excited about the E, the environmental side?
Yeah, so it took me 11 years, by the way, to realize that dream I had in business school about working for an investor. So I did some policy banking work at the Institute of International Finance, and then when you had the pay on vote in the US in 2011, that's when I landed up at State Street Global Advisors doing their asset stewardship or engagement work. And I started engaging on governance, and I became head of the asset stewardship engagement practice. And very quickly, climate and DEI, etc., all started becoming pretty important topics. And somehow everything just at that time turned into like the tone at the top and the G. So as head, I started having to lean into these broader sustainability issues. And I think what's different was that I constantly brought my business lens to any of those topics that were being discussed.
And I'm curious, because you mentioned your start of your career at Liberty. Do you think because you joined an insurance company, it gave you a special perspective? I mean, in my mind, in theory, the insurance companies should be the first to start seeing the effects of climate change. And perhaps that gave you a bit more of a perspective on what some of the unique challenges and opportunities might look like, as you thought about how that industry is going to change.
Yeah, so actually, interestingly enough, I went from being an investor to joining an insurance company because I've been engaging with companies for a long time on making change on climate. And I felt that they weren't moving fast enough. So, in 2019, I said to myself, after 9 years as in the investment world, heading up ESG investing and stewardship at State Street Global Advisors, I looked and I said, I need to learn more about climate and what it takes to make change at a company. And I said, what better way of learning about climate and the challenges than working at an insurance company? And that's what prompted me to leave investments and move to insurance, which of course also has an investment. But yes, I do have to say that having worked in banking policy, then in investments and insurance, I have noticed how different but connected these areas of sustainable finance really are.
That's very interesting. I think we may come back to that because we're going to talk about how each of those areas is changing. But I know when you got to Liberty Mutual, one of the things that you helped kick off, and I think you're particularly proud of, is something called the Climate Council, which you chair there. First, what is it? And then how are you using it maybe to help drive Liberty Mutual to become, if you would, more proactive on sustainability initiatives?
So when you think about climate, it really touches every aspect of the business, right? And there's no one person who can execute climate or decide on climate. So I think you need to get organizational alignment, buy-in, as well as inputs or feedback on any kind of action, whether it's strategy, risk management you're going to be doing with climate or related to climate. And that requires a strong and inclusive governance structure. So the first thing we set out to do was to build something called the Climate Council, identify folks across both at the enterprise level, different functions, whether it's finance, legal, public affairs, public relations, and then across the businesses. So bring in your businesses, but we have a commercial business, we have a retail business, we have an investment arm. So bring them to the table to start having conversations. And initially, we were meeting twice a month for about every time we met, it was about an hour. And now we meet once a month for about 90 minutes. And this group really helps set the direction and aligns on our climate strategy and activities. It oversees the activities and implementation of the strategy, helps coordinate efforts. And what's also very helpful is we take up very gnarly topics that have broad impact, like what is our position on climate resiliency, for example. And so those are some of the hard topics. And the benefits of this kind of a governance or group is that it not only helped us build our strategy and get some good buy-in and make it business aligned, but it also helped us speed up the implementation of that strategy.
And maybe this isn't a Liberty Mutual question, but maybe more of an insurance industry question. When one sets up a council like this, is everybody happy to see? In other words, you could argue that a broker just wants to go write policies, or you could argue that the investment arm of an insurance company wants to invest in whatever it wants to invest in. And perhaps some of those sectors aren't so, if you would, politically correct these days. And so how do you actually bring all the stakeholders to the table and make sure everybody is aligned?
Great question, Rob. We do not we don't make value judgments. One thing about Liberty is we really focus on the science, the data, go deep into the logic, the policy, right? What is the actual actions happening, not what is the rhetoric, right? And of course, we have our own values as an organization and purpose. But I think the other thing we've done is we've really defined whenever we built climate strategy, we've really stuck to who we are and the role we perform in the broader economy. So what is our economic purpose? It's as an insurance company, we're about risk identification, risk mitigation, risk transfer. It's about helping our customers. So we have these principles we live by, which are the guardrails, right? We've agreed we're going to help all our customers, not just few of our customers, right? We're not going to have these blanket statements. We recognize the world is nuanced, etc. So that's the kind of approach we've taken. And we also listen. We don't just tell. It's not about telling, because I know that coming from a business background, especially from an investment background, that people don't like to be told what to invest in and not to invest in, right? But if you tell people, here are the risks, here is what you have to watch out for, then I think you're empowering them to make decisions by giving them the information needed, and also getting them to understand what you're thinking. What are you concerned about as a company, as an enterprise? So I think that at a high level is how we understand the world. Is there are lots of shades of gray, and there's a lot of nuance, and we have to allow for business to continue on through that nuance, but stay true to managing our risk and developing strategy that is aligned, business aligned, and economic purpose aligned.
And it's very interesting to hear about mission and purpose. I had the pleasure of sitting with a senior leader from Bosch the other day, who is a leader in a very different industry, of course. And he says one of the big advantages is the company really, I think, is still owned today by a foundation. And with the employees, somewhat being stewards of the original Mr. Bosch's view and vision of what a good company was. I think you have a big advantage at Liberty Mutual in that, if I'm correct, you're owned by your policyholders, and so I think you're working to serve them as well as obviously the employees that are there. And so I'm kind of curious, when you're thinking about service to those policyholders, how do you sort of incorporate what's the right thing to do around climate?
Yeah. So again, it's great because I do agree. I think being a mutual is a strength for us. It allows us to truly focus on that long term, and it puts our customer or policyholders front and center of our strategy. And I think what we try to do is to really understand, and again, goes back to risk identification, risk mitigation, risk transfer. What are these risks that our different customers are going to be identifying and holding? And guess what? Those customers also happen to own the company, right? Like they're also my policy holders. So I think it's really helpful to focus on the customer. And I do feel that when it comes to climate, we've lost that focus a little bit on not understanding what your end customer really wants and got them ready to adopt and support the transition.
And so not every company, of course, has the benefit of being a mutual. I think a lot of other people have stakeholders there that might be chasing just pure profit at the end of the day, as they define it. And I'm just thinking, your experience at Liberty Mutual, working on the Climate Council, what advice would you give to those other types of companies as they think about, integrating sustainability into their core business strategies?
Yeah, I mean, if I could, I'm going to start with saying how you should not build climate strategy. You should not build climate strategy that is designed to help you meet reporting requirements or regulatory reporting requirements. You should not be building climate strategy based on the heat map of a climate scenario. That is not climate strategy. Nobody truly builds climate strategy. Climate strategy is no different than business strategy. And climate strategy should be fully integrated to business strategy. And so those are some of the things that I truly believe, because if climate strategy is a separate thing, you're going to have it sitting on the side. It has to be incorporated and aligned with your business. And that means in order to start building a climate strategy, you really need to, one, understand your economic purpose. You need to understand your core competency. So for Liberty, for example, as I mentioned, we are very focused on research, modeling, science, risk management, very strong, and we're good at that. Your growth plans and business strategy, again, it's not about telling the business, now grow this part of your portfolio. It's going and talking to your business, say, okay, what are your growth plans? And here's how climate can help you, or you could actually lean into climate to help you achieve those growth plans. Or if you don't consider these risks, it's going to hurt you from achieving those plans. And then finally, really trying to figure out what makes a difference. So you're taking action that is going to support business and profitability. And then there's not much that is, the climate is, people are not going to fight you on it because you've already considered the business angle. And if I could just say one thing that what's challenging in the way we currently think about climate and climate transition is these climate transition plans, right? So fortunately, unfortunately, we're in a world where people think we should be coming up with 20, 30-year plans, transition plans to meet a goal that the world is not on. I if I just tell you, if I were to tell you, like, let's go back to 1980. And Rob, you and I in 1980, we're thinking about, okay, we need to come up with a plan on what we're going to do in 2000 and 2020, right? Okay, so what are we going to do? And you know what we would have done? We would have completely missed the fact that you have the World Wide Web, or people are using PCs, or you and I are talking over, through Zoom, for example, right? And what all the changes and technology changes that happen. So I really feel that when it comes to climate strategy, the time horizon has to be aligned to business strategy. And businesses do not think in 20, 30-year terms. Think more. I mean, yes, you can horizon scan in the 20, 30-year time horizon, but you don't build a plan and execute to a 30-year plan.
Wow, there's lots to unpick there. You mentioned a transition strategy within an organization. And I know that you were one of the leads of setting that up, I think, in 2022 at Liberty Mutual. What are the goals within Liberty Mutual of a transition center? What does success look like for you? Because as you mentioned, it's an ever-changing world with new technologies coming in. And I think new sources of data and understanding that you have to constantly work around or work with. What's the transition center supposed to do?
Yeah, so we set up the Climate Transition Center in 2022 because, like I mentioned, I came from the investment industry or investment world, and the entire conversation around climate transition was really geared towards the banking investment sector. And I felt that everybody was trying to retrofit the thinking or what had been developed for banking and investment to insurance. And insurers had a different perspective and a different voice because we have a different economic purpose in in the broader society and economy. We created this climate transition center to bring that voice of the insurer and reinsurer into the climate conversation, in the sustainable finance climate conversation also. And we focused on our activities in four areas. One is around research and thought leadership. Here, again, I can talk a bit more about how we think about the world, and it's very different. It's differentiated. We really think we should be thinking about system level, not necessarily only portfolio level. Climate, like I said, climate transition and our climate strategy is not based on a heat map per portfolio. It's actually, you got to think about geopolitical risks, and you need a pragmatic business approach. Hosting events to help bring in and the differentiated voice, but also make connections. So we've hosted events with the Institute of International Finance and also the Geneva Association, where we met, Rob. And then we're still building out the toolkits. There are many toolkits for our stakeholders, and our stakeholders include both regulators, but also our policyholders, customers, as well as employees and investors. And then lastly, it's about engaging with these stakeholders in order to both help them understand what are the different types of risks, etc., but also to help change the thinking if need be in order to actually make progress when it comes to climate.
So I think it sounds like you believe the industry and Liberty Mutual within the industry should be a catalyst for change. So the insurance company should be on the front foot and perhaps driving sustainable practices for its, I guess, customers, et cetera. Would you agree with that?
I would say that as an insurance company, we can help. First of all, the perspectives we have may be different, and the focus we can bring will be different. So let me break that down into a few couple of themes that I think we need to address. One is around the climate resiliency conversation that is not being had, or what in Europe you can call climate adaptation, right? We've talked a lot about climate mitigation, but from an insurance perspective, it's adaptation and resiliency measures that actually are going to reduce physical, like help you reduce the impacts of physical risk, climate risk. And so one thing we've been doing at the Climate Transition Center is really pushing the need for more conversation and more funding for climate resiliency, because we do know that for every dollar you spend on resilient infrastructure, you're going to save $13 in rebuilding costs. Then the next level over is our understanding on physical climate risk. And how do you help people understand and take the action needed to mitigate impacts of climate change? I think then another area of importance is, again, when your business is risk, any new risk is an opportunity. So how can we as an insurer understand the new risks that are coming out of the climate transition and, let's say, technology and new technologies coming, and what are the new risks in these technologies, and how can we enable the transition or enable adoption of these technologies by underwriting risks or alerting people on certain risks? And all of what I've talked about requires us to move from being an afterthought or a stepchild, as I call it, like an afterthought in the conversation, to coming on early on into the conversation, being engaged early on in the conversation so that we can help them.
You know what? One of the big topics at COP, I think, is helping the developing world deal with the effects of climate change or the climate emergency. I think insurance can actually be very, very helpful in that regard. A lot of the world does not have insurance, of course, but insurance seems like a pretty interesting tool to use on, if you would, the adaptation side for the developing world. Given the fact that you spent some time living in India. I mean, any perspective on that, what's happening in the developing world? I know this is not your day job at Liberty Mutual.
Yes. So, I mean, I do have to say that, coming from India, often when we're thinking strategy, I'm also thinking about, is this going to be even be implementable, for example, in countries that are still growing or etc. Right? So that lens has really helped me. Coming on to resiliency, I do feel like, we again love to complicate things when it on a global level when it comes to the climate transition. It's really about building codes, Rob. It's really about building codes, right? If we were to have strong, updated building codes and enforcement of those building codes for the different kinds of physical risks that different geographies are going to have. Physical risk is very localized. We can then really save lives, save people, save property. And it's as simple as that, right? But you'd be surprised at how, like, the few countries that, or companies, or even states in the US, let's just talk about that, who have and adopted and adapted their building codes to the changing climate risk that we're going to see. So I do think there are simple, I put simple in quotes because it's not easy to implement these things, but we know what we need to do and it doesn't need to be complicated. Yet we spend a lot of time talking about these like lofty goals and what are we going to do and how are we going to do it, when all that time we could be spending on taking action on things that we know will actually reduce or help us fight the impacts of and mitigate climate risk.
It's interesting to hear you talk about building codes. I always think about how to make the buildings more energy efficient. And again, I think insurance plays a very interesting role here because, as you said, a lot of buildings are not up to spec. But if you can make the finance available, if you can provide the insurance to the people that, if you would, make the loans, you can recoup a lot of that investment through making these buildings, if you would, more energy efficient.
You're absolutely spot on. And this is again where, even as an investor, right, like, we're going to put money where there's a return, right? And there are so many things we can do to, increase energy efficiency, even from a product. Like, let's just come up with a world where we are trying to figure out how do we really reduce emissions, right? And had we just told companies, go and make your products 30% more energy efficient, it's a very direct ask of companies, very clear direction of how to put R&D product, where to put your R&D money, and direct impact on reducing emissions. Instead, for financial companies, we've created this let's calculate the emissions and then let's try targets, etc. So there's this whole aspect of, again, as I talk about making things more complex where they need to be simple, oversimplifying when you need to allow for that complexity. So I think that's a great example of where I feel like we need to become more system level, pragmatic, in our thinking around climate, and almost go to a 2.0 thinking on climate, or come up with a 2.0 program in order for us to make progress and meaningful progress where emissions reduces, not increase.
Very interesting. And I think every podcaster should have a moment of drama where we stare into the abyss, which is, if we think about the headlines, perhaps not the New York Times, but maybe more scandalous newspapers, they like to point that a lot of the world is now suffering through terrible climate emergencies, and the risks are so great that insurance can't play a role. It's just too hard. The physical risks are large and perhaps overwhelming industries in certain places, the insurance industry, that is. Do you believe that? Do you actually think that parts of the world are now not insurable?
I think there'll be risk mitigation measures that will allow for insurance to, we as an insurer want to continue writing, right? So I do think it's really around the right kind of mitigation measures that will allow for insurance and to help protect and save lives and properties, that will allow for insurance that will be needed, that are going to help insurance continue on.
And then I think we'll stay away from politics because I'm smart enough in that regard. But we've just had an election, and also we just had a COP29. Staying away from politics, what do you think the next 4 years look like, or the next, if you would, decade, because you are a mutual insurer where you're thinking long term? What should we be looking for in terms of how, if you would, the insurance industry will change in trying to deal with some of these, rising climate risks? What's the world going to look like under a new COP and a new administration?
Yeah, so maybe I could just talk about the world in general. I mean, and again, this is me reading the tea leaves, and who knows, right? So none of us really know. But my thoughts are really stemming from where let's talk about facts, and where do we acknowledging reality? Where are we today? We're disorderly transition with different countries, states, governments, etc., taking action at different levels. We are actually headed to if we're lucky, 2.7 degree world. That's not me saying, this is like actual facts that are coming out of COP, right? So if we acknowledge and say, okay, let's make sure we hit that 2.5, let's just say 2.5 degree world. Let's at least make sure we get there, because there's only a 50% chance that we'll get there. Then we really need to take different kinds of actions than we have been doing. Another thing we need to acknowledge is that geopolitical issues, government risk. I mean, today I was on a call and somebody said, in Europe, energy security and energy affordability is overshadowing climate conversation or decision making. Again, let's be pragmatic. Let's look at system level thinking. Government debt, right? How much capacity is there going to be to take on and fund action? So where is the money going to come from? And even we have to have honest conversations with the citizens. Eventually, it's going to be people like you and me who are going to have to pay additional costs to transition. So I think these are the kinds of honest conversations that I think are going to happen, and that's going to really play a role in shaping how we move forward in the coming years. And I do feel part of this, the wild card, as I say, is I wonder if we have the ability to let, in economics, there's this concept of sunk costs. I'm going to say sunk thinking. around climate, where, yes, we focused so much on creating these frameworks of reporting and measurement to measure and mitigate emissions in portfolios. But yet today, after a decade of trying to do something like that, we're still at the highest emission. So are we going to move away from that to actually taking more pragmatic action? Are we going to adopt that system level thinking? Are we going to allow for nuanced, differentiated pathways that we know are because of the disorderly transition and different time horizons? And I think that's where the wild card is. I don't know if we can start afresh and do a 2.0 version and say, okay, our prototype probably didn't help us. Now we need to really get there and design something that is really going to allow us to make progress in a meaningful manner.
Perhaps maybe to make a statement and then ask you to respond. I mean, somebody's challenge is somebody's opportunity. So in theory, there are going to be some very happy people building out solar plants and wind farms and electric cars and, all sorts of very interesting technologies that are going to help us transition. So we focus a little bit on the cost, but in theory, there are also massive opportunities. How is you, as an insurance company, how do you support that?
So a couple of things. First off, I agree with you. And our research, which is at the Climate Transition Center, very early on, we said that this was and we call it the and conversation. It's not only about renewables, it's about fossil fuels and renewables, because even your scenarios from the NGFS, the Network of Greening of the Financial System, shows that even in 2050, you don't get rid of fossil fuels entirely, right? So there's a transition that needs to happen. So it's an and conversation. I believe that investments is going to completely dry up in these renewable? Absolutely not. There's going to be an and conversation that happens. How do we as an investor or insurer, actually support this and the new technologies? We've been working at 2 or 3 levels. One is product development and understanding the risks and what is insurable and not insurable. The second, and we worked a lot with Geneva Association, and I know you had them on your podcast, to come up with an insurability framework, because when it comes to investments is about risk return profile. Guess what? Understanding insurance and engaging with the insurer can change that risk return profile, because we can tell you early on what to try to avoid or what risk is going to be insurable, which you can offload from your balance sheet, for example. The other thing is the engaging with policymakers, with people like the Department of Energy, the Westminster Energy Forum, for example, to be able to give them insights into new technologies and the risks in these new technologies. We've been doing a lot of work, for example, on carbon capture and storage, CCUS, geothermal. These are nuclear. All of these technologies, which we believe are definitely here to stay and are going to continue to be of interest, irrespective of which government is, by all governments actually, because these are things that are needed to get us to transition to a low carbon world.
So maybe one final question, which I can't resist asking. You mentioned earlier that the world is heating up. I think different people have different views as to the level at which it will go. I think at COP you said it was 2.7 degrees. And when you sit in an insurance company looking at risk every day, you could become a pessimist. How do you stay optimistic? And what, again, keeps you an optimist when you're looking at all this data?
It's the belief that in human ingenuity, I do believe we will find a solution, Rob. I do. We have done it in our history, and you see the willingness to innovate. And I know that I feel we'll find a solution. I have to believe that. And by the way, also when your business is risk is an opportunity. You do realize that you're going to grow in different ways.
Every risk is an opportunity. I'm going to write that down. All right. That was wonderful, Rakhi. Thank you very much for joining us. And we hope to welcome you back soon.
Thank you so much, Rob.
Thank you for listening to this episode of the Sustainability Talks podcast. To find out more or join as a guest, head over to the ETF Partners website at etfpartners.capital. You can also connect with us on LinkedIn and follow us on Medium at ETF Partners. Until next time, thanks for listening.